Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. There are hopes, early ones at this stage, that Iran is looking for an off-ramp in its fight with Israel, or at least so says Trump. And it is notable that neither Russia nor China are coming to Iran's aid. That was enough to bolster equity markets today. But the US dollar is falling and bond yields are rising. But it is shaky, with the G7 summit talks starting in Banff, Canada, and all participants having starkly different viewpoints from the US, which seems to be trying to get Putin's Russia back into the group. Included in the sidebar meetings is one between Trump and the Australian Prime Minister Albanese. It's going to be a weird experience, but weird is what the US does these days on public policy. Back focusing on economic data, so far there are few signs of manufacturing reshoring in the New York region. Business activity continued to decline in New York State in June, according to firms responding to the Empire State Manufacturing Survey. The headline General Business Conditions Index fell 7 points into a deeper contraction. New orders and shipments both declined. However, the outlook of firms surveyed brightened to less negative. There was another long bond auction of US Treasuries earlier today for the 20-year bond. This drew 13% less demand, so the recent investor appetite pullback is extending. It delivered a median yield of 4.88%, which was actually lower than the 4.97% at the prior equivalent event a month ago. A recent review by the New York Fed of who is paying the tariffs found about 90% of manufacturers and about three-quarters of service firms import some goods, with the average imported input share amongst all firms around 30%. And so far, most businesses are passing on most of these additional costs to their customers, and relatively quickly. So it is a bit of a puzzle why the tariff taxes haven't yet shown up in consumer price indexes. In Canada, housing starts stayed very high again in May after the unusual jump in April, coming in at the almost 280,000 annualised rate when only a 248,000 rate was expected. This was almost the best month of September 2022 and the best 2-month gain ever. Canadian new house building is on a roll, especially in Montreal, which is up 11%, and Vancouver up 10%. It will be interesting to know how much of this is being driven by political refugees from the US, but we have no indications on that. Bolstering the rise in housing starts is that home sales in Canada rose in May, their first rise since November. India released its May trade data overnight, and its exports delivered an unremarkable result, reinforcing that the rise of Indian manufacturing is not being export-led. Its imports actually eased lower in the month. And there was important Chinese data released yesterday showing electricity production was up only 0.5% in May from the same month a year ago, maintaining the weak gains that started in November 2024. This is hard to square with their data claim that industrial production was up 5.8% on the same basis. China also reported that its May retail sales rose a very healthy 6.4% from a year ago, and well above the 5% expected and the 5.1% gain in April. It is a 15-month high. At face value, this is a surprisingly strong gain. But in their housing markets, China reported that new house prices fell 3.5%, but that was the least year-on-year fall in a year. Month on month, they say more gains are showing up. Prices for resales were down more year-on-year, and there are no major cities where they are rising month on month. And recent remarks by Chinese Premier Li seems to have confirmed that their residential property development market is not improving and perhaps at a new dangerous stage. Beijing is facing a new round of bailouts to prevent collapse in the sector, once a star of the Chinese economy. In the EU, they reported that wage growth in the first quarter of 2025 was up 4.1%, less in the euro area. This was a slowing from the recent peak of 5.7% in the first quarter of 2024. There is a rather fast cooling off in Germany, Italy and the Netherlands, whereas wages are rising faster in Spain and France. Off to a very strong start, Airbus has announced huge orders at the Paris Air Show. The troubles at Boeing have meant that their CEO is a notable no-show. Also of interest is that France has shut down the Israeli presence at the trade event. The US Treasury 10-year yield is now at 4.46% and up 5 basis points from yesterday. And the price of gold will start today at $3,392 an ounce, down $38 from yesterday. And American oil prices are still in the higher zone, although down $1 from yesterday at just on $72 a barrel, while the international Brent price is just over $73 a barrel. And the Kiwi dollar is now just under 60.7 US cents, up a half a cent from yesterday. Against the Aussie, we were up 10 basis points at 92.8 Australian cents. Against the euro, we're up 40 basis points at 52.5 euro cents. That all means our trade-weighted index starts today at just on 68.4 and up 50 basis points from yesterday. And the Bitcoin price starts today at $107,915 and up 2% from yesterday. Volatility of the past 24 hours has been modest at just on plus or minus 1.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.